First of all, how much political pressure did you feel you had to do this deal?
Yes, good morning, Francine. Great to be with you. So we've had absolutely no pressure at all. This is a transaction which is very good for our franchise in both Spain and Portugal. It creates the best bank in both markets. It fits our financial criteria, and we have acquired this from the resolution board after an intervention due to liquidity, as you mentioned.
So, Ana Botin, give me a sense of why exactly it makes strategically. I know you were going there through some of the pros, but give me a sense of whether this will hurt your earnings and how much by in the shorter term, and what the longer term strategy for it is.
So the transaction makes huge strategic sense. It complements our franchise really well in Spain and Portugal. In Spain, we will be the leading bank for small and medium-sized companies. We'll be around 24% market share. In Portugal, it makes us also the leading private bank. On a financial sense, we made a careful evaluation of this bank. When the sale process was put in place some weeks ago, we decided not to present an offer then. However, as the opportunity arose basically yesterday to put an offer to the resolution board, we are going to raise 7 billion euros in capital. The goal is to make 1 billion net profit by 2020. This is a return on investment of between 13 to 14% for our investors. We reiterate all our financial targets for 17 and 18 on earnings per share, dividend per share, and tangible NAV. And very importantly, as of 2019, this transaction is going to allow us to actually improve on our targets.
All right, so there's no huge worse implications for your, for example, your targets or your capital going forward.
The transaction will be capital neutral for Santander, so the 7 billion, which will be a rights issue, will allow us to, as I said, keep the CET1 close to 11%, which is a comfortable level for us and for the group. So it's capital neutral for Santander.
Ana Botin, do you feel Santander has really had the proper time and also access to really figure out what sort of risks remain from Popular's exposure to bad real estate?
So yes, Francine, we know the market really well. As you know, I used to run Banesto, but our teams know the market very well. We had time to look at the numbers and do some due diligence during the private process. The combined real estate NPLs is a small number for Santander, but specifically on the non-performing real estate portfolio of Popular, we are bringing the coverage from 45 to 70% coverage. The net number is 6 billion euros. This is less than 1% of the total balance sheet of Santander. So it's well provisioned, and very importantly, it has a level of provisions and the criteria of provisioning that we apply across the Santander group.
How do you plan to sell some of these real estates that were owned by Popular? Do you also have any plans to either lay off staff or close branches?
I'd like to also say that this opportunity comes at a very good time in the cycle. Spain is doing really well. As you know, Spain has been growing close to 3% for 2 years and will be growing close to 3% again this year. So it's at the right time in the economic cycle. We are not in a rush to sell the real estate, but we do aim to sell at least half in the next 18 months. So this is quite important and will allow us, again, to deliver on all our financial commitments as we have expressed these to the market.
I mean, interesting that you talk about the cycle in Spain, because what do you think this means for Spain as a country? There were concerns about Popular and the fact that ECB may have not found it viable. Does this mean that Spain has a less of a hurdle?
Well, I think this transaction makes the Spanish financial system even more solid. We do have a very strong financial sector, and this transaction basically, makes it even more so. Santander has deep experience, as you know, in integrating banks, so we are confident we have the knowledge of the market to have made the assessment in terms of the value. We are confident we have the teams to execute. And our goal is not to lose a single customer in this integration. As of today, we have teams in place in Popular to take over and make sure that the teams there are confident that they can continue serving customers. And I want to say that we are fully committed to supporting both the teams and the customers from today.
Ana Botin, I know you're short on time because you need to go back to speaking to investors. So one very last question. Who spoke to who first? How did this start? When did you think actually this could be a great asset, as you've explained to us?
Well, a few weeks ago, there was a process where we were contacted, among other banks, to take a look at a possible market transaction. We declined at the time to make an offer, and the resolution authorities, both European and Spanish, came to the conclusion that there was no viable private solution. They decided on intervention, and yesterday we were invited to participate in an auction, which we were notified, I think at 6 a.m. this morning, that we were acquiring Popular.
And this was it a surprise, or did you always think that you would get it from a couple of weeks ago when a negotiation seemed to have started?
The situation, as you know, in this case, it's very fluid and it's very difficult from the outside to evaluate. This is the supervisors. I think the supervisors have acted fast. I want to stress this is the first situation where the Single Resolution Board has acted. I think this is really great news for Europe, the financial sector, and Spain, that we're able to do this in the way it has been done. It's been done with great discipline and in a very professional way. And I think it's very good news, as I say, for Europe, for the financial sector, for Spain, and for Santander shareholders and customers and employees. So we're happy and we're committed to making this an excellent integration for all.